Hi, I'm Michael Owen and I'm thrilled to join Weeks as their global brand ambassador. In football, success comes from precision, speed and strategy. Every move matters. With 1,000 plus trading pairs, you can trade spot, futures and more. And security? Weeks leads the way with Plus, a 1,000 Bitcoin protection fund. Join me on Weeks, where new wealth is made.
Good afternoon, legends, and welcome to Trading Congress 2025. You're here on behalf of the Bird Nest, BC Richfield, and we have got a full week of focused education, market insights, practical guidance designed to help you become stronger and a more confident trader. This year, Trading Congress is supported by our partners EdgeX and Weeks, as you saw in the adverts, who make this entire edition free for everyone. So please do give them a big thank you. All key links can be found in the description on YouTube, or you can go over to our X channel at The Burb Nest, and you can find all the information in there. So I don't want to mess around. We've got an absolutely fantastic guest today in the form of Matt Crosby. Now, one of the things any of you who are familiar with me will understand, I'm more on the technical side of trading. So what I love to surround myself with are legends like this chap who is a real go-to source for everything on chain. So without further ado, let's bring Matt in. How are we doing, Matt?
I'm great. Thank you very much for having me. I'm excited to be here, share some insights and some data and some knowledge. And again, try and maybe give a little bit of a primer to people who maybe aren't too familiar with on-chain data to show that it really can help whether you're trading, investing, dollar cost averaging, or just keeping up with what's happening on-chain. I think it's a great resource for everyone to dive into.
Yeah, I couldn't agree more. And you know, one of the things I'm always very upfront and honest about is, and it harks back to an old saying of never be the smartest person in the room and always surround yourself with amazing people, which has basically been the story of my career. All right. So we have some amazing fundamental team. We have an even more incredible FA. We got people doing the on-chain for us. And one of the absolute wizards on that is KZM, who's our head of FA with inside the Bird Nest. So I get all of my information wonderfully delivered by him. Right. And then we look at it as a team, and then I kind of, you know, dissect that, look deeper into it, and then I add it to my own kind of strategies and philosophies and play it through. So I think it would be really, really good for people to understand maybe just a little bit of an intro about yourself, you know, a bit of your background, and then just, I know it's a broad subject, but, you know, what on-chain means or what it means to you.
Yeah, sure. So a little bit of a background into myself. I've been full-time into Bitcoin and the cryptocurrency space for about 7 years now. So I've been through a few cycles, I've seen the ups and downs, and I've been in that place where I think a lot of people start, where you come in and it's a little bit overwhelming. You can see all these indicators, all of these trading guides, all of this new information coming in, and it feels like you're trying to find a holy grail, something that's going to simplify the process, increase your profitability, etc. And I'm sure everyone's pretty much aware now, unfortunately, there isn't a holy grail. So what you need to do is look for confluence. So you need to look at the technical factors, the fundamentals, etc. But I really got into on-chain data because I realized that Bitcoin initially and specifically was pretty unique in the fact that we could see all of the transactions happening in real time. So if you look to the stock market, for example, it can take a day or even months potentially to find out earnings data, to find out who's actually buying and selling at large quantities. Whereas with Bitcoin and cryptocurrencies, like I said, we can see this happening in real time. So I quickly realized that there was an additional factor that we needed to take into consideration, this on-chain data. And when you leverage this, essentially you can see the supply and demand economics happening in real time. So again, it's a pretty broad subject. So as I said, it's being able to see all the transactions, all of the addresses, all of the wallets, and what they're actually doing on chain in real time. And once you actually aggregate a lot of that data, again, it can just really simplify the process. And as we can see from a lot of different sources, unfortunately, the reality is most people are wrong most of the time. And being able to see this mass psychology on chain, being able to see the real time capitulation or the extreme greed in the market and how that actually impacts price action, I think is, again, just an invaluable tool and something that everyone should be taking into consideration. As I said, with some confluence, with some macroeconomic data as well, some fundamental, some sentiment analysis, all of these kind of paint a little picture and put the pieces of the jigsaw together of where the market may be heading. So again, I think it's a pretty invaluable tool. Of course, I'm a little bit biased, but over the past few years, I've definitely used it to my advantage, and I'm hoping we can shed some light on that to allow other people to do the same.
Well, I mean, that's amazing. And look, confluence as traders is something you kind of hear about in your early days. You come to really embrace in the kind of middling part of, you say, your career, or getting towards doing it either, full time or rather seriously, if you like. But, I'm somebody that's really kind of got into order flow trading, really looking at what the story is behind the candlesticks, right? And when I started out, very, very narrow focus, very niche within price action, I really wanted to kind of master that side of it. And then really, what I discovered probably after my first few years was that it's a game that's all about edge. Right now, whether, like you say, you're getting that edge from your understanding of the technicals, really, you realize that that's not always really enough. Ultimately, if you can spot something quite simple on a chart, everybody else can, right? So we're looking for that extra bit of confluence, right? That extra bit of confidence as well behind what we see on the charts, or behind what we're reading in the news, behind what we're divulging from legacy markets. So if we were breaking down blockchain data, right? And what its kind of key and most genuine use is for us making better decisions. What's your thought process on that? What's the really important side of this that you see, or that maybe you'd recommend people just getting into this to really look to focus on?
Well, so one of the best ways to really kind of enter initially into the space, because of course it can be a very broad and complicated field of expertise, the on-chain data side of things. I'm sure everyone's seen lots of charts and data shared on social media of things that just look incredibly complicated, and you can take it as far as you really like with that. But just taking a step back and looking through a very simplistic approach, on-chain data allows us to see not only what the majority of people are doing, so we can see, say, the average accumulation price of most traders or investors on the market, to see when people are at a profit or see when they're at a loss. You can also look at very specific niches within these traders. So for example, in Bitcoin, if you look to the people who have been accumulating for a decade or so and hold hundreds or thousands of Bitcoin, just again, from a pure supply and demand economics perspective, when they take action, when they start rapidly distributing their coins, like we've seen over the past few weeks, which has been a massively contributing factor to the large sell-off that we've seen across the space, once you can actually track in real time what these large, experienced, impactful traders are doing on the market and on the network, then again, you can almost do this order flow analysis where you can see the volume, you can see the activity happening. But again, rather than looking through exchanges where we don't necessarily know if these derivative markets or these paper Bitcoin or whatever cryptocurrency we're trading are having a true influencing factor on the underlying price action. When you look on chain, this is real spot Bitcoin, this is real spot Ethereum, Solana, whatever you're trading, that is being moved. And when you can isolate this activity to look at these very profitable investors, to look at these who are holding a huge amount of these underlying circulating supply, when they move it, and you pay attention to that, again, it can just clarify what they're anticipating to come up with. And again, from supply and demand perspective, when you see hundreds of thousands of Bitcoin, billions of dollars hitting the open market in real time, if that's not matched by an equal amount of institutional inflows or retail FOMO, then again, you can kind of anticipate that the market is probably going to take a little bit of a downturn in the near or immediate future. So being able to see these insights and actually derive metrics and data points from these to, again, just clarify the process, again, just really simplifies everything. And a lot of the times people, like I said, will overcomplicate things, but you can almost cheat by using this data. You can look to see what the market's most profitable, most experienced, most influential and largest traders are doing, and essentially just piggyback off of their decisions. Because like we can see, a lot of people, unfortunately, aren't so profitable in the space. So why not use this extra data, use this leverage? I mean, it's a bit of a meme to track Nancy Pelosi's trading or do the inverse Kramer stuff. But now we can actually track what the people in Bitcoin are doing as they're doing it. You can essentially just piggyback off of them and almost use it as a cheat code to try and outperform a vast majority.
And I love that, because really I'm mainly an intraday trader, right? So, talking of supply and demand is right up my street. Okay, finding the key areas we're seeing resistance, support form within the market, backing that up, then really diving into the volume metrics, volume spread analysis, looking at order flow, finding where those big players, all those aggressive orders are hitting the book, but they're not really getting very far. Right, looking for that absorption in the market to play mean reversion, or look for levels to just be absolutely torn through, right? Aggressive buyers or sellers ultimately overwhelming the passive buyers and sellers sat in the book. So one of the things where that can get a little bit trickier is extrapolating that onto the higher time frame, right? Because you're reading the tape at a very, very high rate when you're doing it intraday. So I like this idea, and I see now where people like KZM, where other people in the space, we've got this amazing fundamental analysis called Kazi coming on the show in a few days as well, how they have this great conviction to kind of say, guys, this is just a bit flat for me right here. The kind of participants I want to see in the market, active in the market at the moment, aren't here. And they're the participants that matter, right? So having this little conversation, I've been really excited by this show. I love talking technicals now, but I also really love kind of finding out things that, isn't in my wheelhouse of expertise, right? And one of the things that keep coming up is about the accessibility gap, right? And why it's valuable. Now, do you have any kind of thoughts on that you could share? We've had a few questions come in from members.
Yeah, so accessibility of on-chain data. I mean, again, if you look to traditional markets and you need a Bloomberg terminal at $30,000 a year, and you need to be tracking through earnings and balance sheets, etc. Bitcoin data, blockchain data is open source. You can run a node and do this type of analysis yourself. Whereas historically, you needed to be a Wall Street analyst or some institutional sophisticated investor to gain access to this data. In the open source thesis and kind of premise of Bitcoin, blockchain, cryptocurrencies, this is open to everyone. We can all gain access to this data. Now, of course, I work for Bitcoin Magazine Pro. I'm a little bit biased. We can help kind of aggregate a lot of this in a more simplistic manner and save yourself the troubles of actually doing this. But realistically, the kind of hurdles you need to cross, I can't think of the right word, the accessibility for new market participants to gain access to this data is basically zero. This is open and accessible for everyone. If you don't want to use platforms like Bitcoin Magazine Pro, Glassnode, CryptoQuant, etc., you can spin up a node and do all of this yourself. So again, it's amazing that we can now have this data that previously and in other markets has never been accessible for individual retail traders like you and I. Now it's available to everyone who's willing to spin up their own node and actually track this on-chain data or use third-party platforms like BM Pro, like the other ones that exist, and actually use this in real time to, again, increase your own profitability, efficiency, and simplicity in the market. Because, again, I kind of really went down this route because a lot of traders and investors, I'm sure, have been in the same place where you're tracking the market every single day, you're looking at the 5-minute candles, you're looking at all of the volume happening in real time, and sometimes it can be a little bit, again, overwhelming, and it takes a lot of time. Whereas for myself, I'm much more of the kind of approach and philosophy that I want to massively increase the simplicity of my approach to the market. I don't want to have to rely on 10,000 different indicators and look at different levels on the charts. I still do that a little bit here and there because I just enjoy doing it. But again, it takes a lot of time and it can be very complicated. Whereas looking at this on-chain data, looking at these metrics can make it so my decision-making process is looking at 2 or 3 different data points every few days. And it takes a very minimal amount of time to have a fairly high degree of conviction in my decision-making process. So again, not only is it increasing the profitability and efficiency, but decreasing the amount of time I'm actually having to spend doing this analysis is, again, a major part of the outperformance, why I've actually gone down this route. And I'm trying to increase the awareness and accessibility for the general retail public to, again, try and use this data themselves.
Yeah, for sure. And 2 real kind of key points you made that I want to just go back to for a moment. One is conviction. as somebody that's traded these markets like full time for 5 to 6 years, been in them to 7 to 8 years, right? Then conviction is such a big thing, and it's such a big thing with traders that we work with. Be that people that are at the beginning of their journey, people that are really looking to refine an edge, that are doing this either full time or looking to go into that scope. There's only so much you can look at a chart before the little gremlin pops up on your shoulder and says, "What if that doesn't happen this time? What if this level's been shorted successfully too many? What if we pop? What if we..." That hesitation is really, really costly as a trader, especially an intraday trader, but not just that, every form of trading, right? So any way we can get more conviction, so that, for me, for example, of course I don't not lose trades, right? But actually what I'm saying to myself now is, I've got such good conviction to go in at this level. If I'm wrong, I'm wrong. But I also know that if I am wrong, there's a high chance that actually the market's kind of moving against my overall thesis, and therefore it gives me an opportunity to potentially trade it the other way. Then I can dive back into the data, use this kind of Bayesian methodology. As traders, as analysts, we're always taking on board new information, and it would be suicidal to not take that on board and listen to it. But the other thing I wanted to go back to, which I find really interesting, is what you're saying about this barrier to entry, right, that used to exist within Onchain and in traditional markets. I'm a traditional market trader myself. If I look at the resources that I had working for like a major fund in Germany, for example, which is really where I started out, we had 10, 12, 15 people in a team analyzing this data every day off the Bloomberg terminal, right? Sifting through it. And like you said, I mean, it's like $5-6 a month, right, for Bloomberg terminal access, 30,000, 40,000 a year. It just wasn't available to the average person on the street, right? So you had that huge gap. Now I think the barrier for entry is slightly different. The information's readily available for Bitcoin, but maybe the barrier to entry is one more of intimidation, right? People thinking, God, how am I going to, what does building a node even mean? Do you know what I mean? It just sounds crazy, actually, but I think what you guys do really well, and some other, participants in the space, is break that down, build a really good user experience around it so that people have, you remove the barrier of the technicality to access that data, and then you can focus on using it with your models. Is that really what you guys see? Is this a UX journey? Is this, okay, how do we make this accessible? How do we make this easy for people to use so they're not intimidated?
Yeah, 100%. I think you hit the nail on the head there. And like I said, it can be as complicated or as simplistic as you like. And again, it can kind of vary depending on your own personal approach to the market. So if you're more of an intraday trader like yourself, then it may be worth monitoring that real-time data to see, again, from a supply and demand economics perspective, when there's a huge amount of Bitcoin hitting exchanges, or when there's a huge amount of new coins being minted, such as Tether, for example. When we see these things happening in real time, again, it gives you this almost conviction, this edge across the markets, that you can see the data happening before it's kind of more publicly available. And yeah, accessing this data, it may sound very difficult, and that's why we're trying to kind of bridge that gap by doing all the technicals and the boring back-end stuff so you can just focus on the data that really matters. But again, if you're someone that just wants to check 2 or 3 charts once a week, once a month, to try and get that conviction, increase your probabilities, because again, kind of going back to what you said before, there's never going to be 100% conviction. You're never going to get every single trade right. But if you can kind of piece things together, if you can look at the macroeconomic conditions in the market, you can see global liquidity rapidly increasing. You can look at the technicals and say, we're holding these key psychological supports above or beneath this key level of support and resistance, or this key moving average. And then you can look at the on-chain data, you can look at the derivatives market. Then again, it increases your own conviction and probability of success in the market. So it's just one of those where I think there's, within Bitcoin, a lot of people are maybe coming in and learning how to trade and do this fundamental analysis based on existing means, looking at traditional markets, and are really missing the fact that Bitcoin, being this relatively new technology, has so many different avenues to actually do this type of analysis, to actually gain some insight into whether we are fundamentally overvalued or undervalued, that maybe it's slightly overlooked. And I think just trying to simplify this process, again, make it a little bit more accessible. A vast majority of all the data that we provide is entirely free, so maybe we can look at a few charts and data points a little bit later in this episode.
Yeah, I'd love
but
that,
again, I think just helping people to simplify their process, have this higher conviction, and make this data that was previously inaccessible just very easily and readily available for people to look at, whatever their trading thesis, whatever their goals are, I think is just the ultimate goal of ours.
Yeah, I mean, I love the words free, easily accessible, right? I think everybody does. I don't think it matters what walk of life you come from. But the reason I really love it is it just means that, again, it's not that barrier for entry it used to be. It is providing accessibility for people. It is giving people the opportunity to utilize something that they weren't able to utilize before, right? I think one of the really interesting things, I think, if you go back, well, maybe for me, when I kind of seriously got into crypto maybe 5-6 years ago, you had, you know, people in the space like Willy Woo and stuff like that who was really coming in, and there's a really small pool of these guys that were using this, and there was almost like people turning around and saying like, this just exists because this is what they do in legacy markets, right? And it's not. It's totally different. You're using very similar information, but this is actually a lot more accessible, right? You know, you can't just go and access that information on a basic trade. You know, if you're starting out in trading, you wouldn't have that. And the other thing, you know, that I wanted to look at there is a lot of people often think they have to change the way they look at markets in order to bring on board something like Onchain, right? Fundamental analysis. They think, yeah, but you know what? I'm a technical trader. I'm doing okay. Yeah, I get caught out sometimes, but you know, I don't want to change my entry methodology. I don't want to change the way I read the market. They're maybe not really kind of understanding that while it looks complex, you're looking at something that can provide a beautiful confluence to a trade theory, right? And again, all of a sudden, you know, you're thinking, okay, the technicals are telling me I want to be long this market right now, just for example. Wouldn't be the case in crypto, obviously, would be the case in something like the indices, right? Looking for those opportunities at key support. How do you know, or what gives you that conviction that support's going to hold? What do you want to know? Well, you want to know who are the major players involved at that level, right? You want to dive in behind the candlesticks, look at who's buying, who's absorbing at that level. Is their strength genuinely coming in? All of a sudden, you just need to tick that little box, and maybe you're feeling out the market. Maybe you lose a couple of long trades at that point, but you don't lose that conviction to know you're on the right side of that market move, obviously, until you're not, right? So I think that leads me back to really nicely into the next question, actually, which is about following, you know, smart money, whales, you know, people that are really making impacts in this market, and also spotting opportunities. Now, this is probably the question that probably excites me the most in this, and I know it's a very broad one. I know it's not going to be a case of here's the formula, just go on this website and just, you know, click this. But what would be your approach here, right? If you're talking to somebody like me, maybe somebody that's a bit newer to the market, someone's looking to embrace on-chain data and analysis, how can that be used to follow smart money and use that to spot early opportunities that are potentially developing in the market?
Yeah, so of course, great question. And it kind of relates back to what I said previously of this allows us to essentially cheat and just copy those big institutional, large, influencing traders in the market. So if you look over the past few months, for example, Bitcoin had been at an equilibrium where we'd seen this divergence where commodities, equities had been rallying hard and Bitcoin had been flatlining in this $120,000 to $100,000 range for what felt like an absolute eternity. But if you looked at the on-chain data, it kind of cleared the picture a little bit. So again, from a purely technical perspective, from a fundamental perspective, you could say Bitcoin is undervalued. I should be taking long positions here, but you may be getting chopped out a little bit. And if you looked at the on-chain data, again, this is where you can see the true supply and demand economics of the market. You could see a monumental amount of long-term holders, these largest, most experienced market participants, really start aggressively distributing their coins. And again, from a purely supply and demand economics perspective, we just didn't have enough new capital flowing into the market. I'm sure pretty much everyone's felt this. We've not had this big retail FOMO. It feels like sentiment the entire cycle has been very muted. And there's just not been the huge influx of new participants this cycle. We've mainly been propped up by institutional inflows and these kind of passive funds and treasury companies accumulating, which is great, don't get me wrong. But again, if you just looked on chain at the data, you could see, okay, maybe this is why we're struggling, because we've seen millions of Bitcoin hitting the open market, which has really muted our upside potential. So kind of what you mentioned previously of allowing yourself to zoom out and look at the market from a macro perspective to confirm your own directional bias. So once you can see this actually happening on chain, then again, it gives you some indication that maybe we need to start being a little bit more defensive. And for actually tracking the biggest participants on the market, looking at something like a metric called the whale shadows, you can see, again, in real time, with practically zero delay, looking at this on-chain data, you can see when there's people who have been holding Bitcoin from 15 years ago who are now starting to aggressively distribute their coins. And again, just from a supply and demand economics perspective, if you see 1,000 Bitcoin hitting the open market, you need someone willing to buy 1,000 Bitcoin to just
Yep.
keep the price at an equilibrium. And if we don't have that demand matching that supply hitting the open market, then prices decrease. So once you actually aggregate all of this data, you can see we've seen a huge amount of distribution. And once we start breaking key levels, you're seeing these long-term holders again start taking some profit, start selling, start sending to exchanges. Again, can reaffirm your bias, give you some confirmation that this new downtrend that we formed probably isn't going to be something that is just a quick flash deleveraging event. If you looked
Mhm.
a few weeks ago, for example, I think it was the October 6th, October 10th, I can't remember exactly, the big leverage flush out that we actually had that massively impacted the altcoin markets and Bitcoin as well. But when that actually occurred, we didn't have this big flush out from long-term holders. It coincided pretty closely with the market cycle peak, but it didn't immediately result in a cascading price action where we broke through many, many levels of support. We rebounded a little bit and stayed within that range. Whereas once we broke beneath kind of that 1 year moving average, that 50-week moving average that technical traders were looking at, the big
Mhm.
psychological fundamental level of $100,000, at that point you could actually see a lot of these long-term holders, a lot of these large market participants begin distributing their coins. So at that point, you can actually confirm the directional change. You can say, right, at this point, we've structurally, technically broken beneath some key levels. And we're also seeing lots of long-term holders begin to, again, lose some conviction, start more aggressively taking some profit. Again, maybe this confirms that this isn't something that's just going to be a temporary wick beneath. Maybe this is the start of a more confirmed trend change, and maybe we need to start being a little bit more defensive, looking for shorts. So I think, again, it depends on what your thesis is. If you're more intraday trader, then you can just use this to zoom out and say, right, do I need to be directionally long? Do I need to have a more short-term bias to the downside? Or if you're someone that's a more macro investor, then again, you can just zoom out, look at the market. And even if you're only taking positions every few months or every few years, being able to see, right, we've been in a huge period of distribution, but now we're seeing long-term holders begin accumulating again. We're seeing less and less supply hitting the open market.
Mhm.
Now might be a good time to start accumulating Bitcoin, strategically dollar cost averaging into the market. And again, if that aligns with some confluence that we're seeing some macroeconomic policy shifts, we're seeing federal rate cuts, we're seeing more
Mhm.
favorable conditions in equity markets and commodity markets, and that aligns with key technical levels. Again, it starts to paint a little bit of a picture that you can have a little bit more conviction to actually go against the trend, be a contrarian, and start accumulating, buying when there's blood in the streets.
Yeah, I love that as well. Buy when there's blood in the streets, blood in the water. Very much a favourite kind of saying of mine. It harks back to an old pit trader that I knew, and somebody I grew up with who worked on the floors, and just said there was this monster that just used to work on the floor with all the new traders that would come on. If anybody was buying green candles, he would just go absolutely mental at them, saying it's not how you trade. You buy when there's blood in the water, not when there's euphoria in the air, right? And again, sounds simple, hard to do in practice, because I find that, look, learning the technicals, understanding market dynamics, even the basics of macroeconomics, even the basics of understanding interest rates, how they affect markets, looking at, like you said there, okay, we understand that we're in a position now, if you line the news up with the fact that the Fed are getting a little bit shaky after no data now about the rate cut in December, that plugs into the markets. Okay, I've got my technical levels. What I like about this is whether you're using supply and demand, support resistance, obviously the same kind of thing, but viewed in a different way, whether you're using moving averages, Fibonacci's, when you've identified your technical level of interest, go behind the scenes, look at the on-chain data, find out how the major participants are acting there, and kind of get that validation. Why should this level hold, and what does it mean if it doesn't, right? Again, back to that conviction, whether that's intraday, whether that's swing trading, whether that's positional, whether it's macro, it's all there to really kind of dive in and really understand. So, obviously, I can really kind of go on about this forever. And what I really want to do as well is leave some time for you to share some charts. So, how would you analyze wallet movements, and the kind of chain data to identify projects maybe before they go mainstream, something to maybe give you a little bit of an edge about maybe, looking at that accumulation, maybe looking at those early stage opportunities?
Yeah, so it's one of these where I'm obviously more Bitcoin focused. So this is more general cryptocurrency term, but I'm definitely not a Bitcoin maxi. I definitely follow other markets and like to check on what's going on. I used to be a lot more invested in altcoins, different currencies. So I was
Hmm.
very much tracking this data as well. And again, just from a supply and demand economics perspective, and I'll relate this back to Bitcoin, but if
Hmm.
you just look at almost the distribution of coins, what you want to see is strength and conviction from these early adopters, these holders. And not too much concentration in a select few. So one thing we've seen in Bitcoin recently, and where we've had this muted price action, but is one of these that I actually think long-term could be beneficial for the market, is when you have a lot of people getting into a project early, like Bitcoin a decade or so ago. You have a huge amount of coins held by a very select few amount of people. Now, these people do deserve to be rewarded for holding for a decade and seeing these prices hugely swing to the upside and the downside and having that long-term conviction. And now there's the sufficient liquidity that they can take some profit. All good. This does mute the price action, but once we actually see a distribution from, just as a simplistic example, a few hundred people who hold 10, 20, 30% of the supply, you only need a few of these to maybe become a little bit bearish, to start taking some profits, getting that new Lamborghini or that new house, whatever they want to buy, that's fine. Once they start to sell, again, you can maybe see the supply and demand economics really start negatively impacting the market, because they were buying prices at prices significantly lower than today. So the capital inflows required to just match their selling are monumental. But once we've actually had this transition, once we've actually had this shift from these early participants who had a huge amount of the supply distributed to more and more market participants, now we're actually requiring, over a longer time frame, more of these. We're requiring, rather than a few dozen or a few hundred people to become bearish, now we're requiring thousands, tens of thousands of people to have this downside bias and begin distributing before we really see the supply and demand economics turn bearish and give us some thesis that the price are going to move to the downside. So what you want to see is a healthy amount of distribution in early cryptocurrency projects. If you're tracking the supply, the circulating supply, to see which wallets are holding them, you don't want to see too much concentrated in a select few. And once you actually see this distribution process, again, you want to see it spread very evenly and consistently over a slower time frame. You don't want to see someone who held 51% of the supply begin actively dumping 10, 20% every few hours. It's just not healthy to see. And again, just from a game theory perspective, I don't think trading or investing is a zero-sum game necessarily, but once you actually see the theory behind people taking some profit, why are these early adopters beginning to distribute their coins? Now, in Bitcoin, there's the argument to be made that now that we've got this big institutional influence, there's the liquidity available to actually sell these coins. In previous markets, you saw a huge retail inflow, this big FOMO of capital, and at that point, there was sufficient liquidity for these early adopters to begin taking some profit. Whereas previously, if they were to try and sell, at any other point, they'd cause a huge amount of slippage, the market start moving to the downside, and it just doesn't make sense to really begin aggressively distributing at those prices. Whereas now we've had this institutional inflows coming in, kind of steadying the market and this passive flows. Suddenly they're not selling to individuals who only have a few hundred or a few $1,000s. They're selling to BlackRock and Michael Saylor, who have billions and billions of dollars of capital available. So even outside of Bitcoin, if you're tracking the flows of coins in other cryptocurrency projects, whatever it may be, if you're seeing this distribution to these long-term holders who have conviction, rather than these coins moving to exchanges, moving to short-term holders where you can analyze these wallets and say they're really clearly just moving quickly for a quick buck here and there, if you can just see this spread and conviction from many, many, many holders, again, it just increases the likelihood of that project, that coin, that token, whatever it may be, having the potential to really exceed the upside of the not just short term, but over the long term as well.
Yeah, for sure. I think one of the things that really interests me there is you understanding the dynamics of markets, really, like you say about game theory, right? In a lot of ways, looking at kind of auction market theory as well, in terms of kind of looking for the common denominator, which is basically liquidity, right? And you have to believe that a lot of those early stage adopters of Bitcoin, not all of them, obviously, but a lot of them understood that really, if their thesis went well or beyond their projections, they were going to need to sell to institutional players, right? To have that institutional adoption, to have that major interest in it, like you say. Otherwise, like you see with low liquidity coins, it doesn't take a lot for major holders to start to sell, and the whole thing, you see that chart that goes up and it ends up looking like the Burj Khalifa, right? Straight up and straight back down again. So I think that's really interesting. So one of the things that I did want to ask you about as well is looking at kind of common traps or mistakes people make on chain, and then also, you know, what you would kind of recommend as your checklist, really, or what you would say to people. So I don't know if you've got some charts, or if you maybe want to show us the platform or anything your end, and maybe we can kind of tie those two in, because I know I'd certainly love to see it, and I'm sure a lot of the viewers would as well.
Yeah, 100%. So I can share some just good entry-level introductory charts that I think can help people, and that a lot of people can immediately go and use, see if it helps with their own personal trading and investing. Because again, I don't care if you're trading using lunar cycles or
Mhm.
whatever it may be, but if you can piece this together, if it helps with your own approach to the market, then I think it's beneficial to do so. And all the resources we're going to share today are completely free, so you can go and try them out, see if you like them. If you don't,
Awesome.
that's absolutely fine. But one of the common traps that we see is, like with most things, is paralysis by analysis. You see people coming in using 100 different indicators, trying to find this holy grail, trying to put 1,000 different lines, technical levels, and everything on your chart, when really you can just zoom out and look at just a select few that really impact the market. So first and foremost, if we look at this one, which is probably the basis for a vast majority of on-chain data points, which is the realized price. So this is literally the average accumulation price or cost basis for all market participants, almost like a VWAP, a volume weighted average price from a technical perspective. But
Mhm.
here we can see the actual on-chain data, the spot Bitcoin that's actually being moved. So what we can see is, again, common pitfall that we see is a lot of people start capitulating once they get to a loss. We have some data points we can share a little bit later to outline that. But once you look at the average accumulation price of Bitcoin, which is currently sitting at around $56,000, and again, you can do this type of analysis on different cryptocurrencies, Ethereum, Solana, whatever your favorite one is. I'm sure you can
Mhm.
get this data to do it by yourself. But once we see a vast majority of participants at a realized loss on their position, this is actually the best time to be a contrarian, start doing the opposite. And like I said previously, on-chain data is really just the mass psychology of Bitcoin, of cryptocurrencies, but quantified. We can see when people are euphoric and we can see when people are capitulating. And doing the opposite in a very simplistic manner is really all you need to outperform a vast majority of participants. So like I said, this is the basis of many of the charts that we actually see. And one of the most popular ones based on the realized price is the MVRVZ score. This is a common one that
Mhm.
you'll see a lot of people referring to.
Yeah.
And what we can see, while it hasn't worked so well this cycle, but again, I want to keep it simple. There are some nuances here. There are some other derivatives of this data that we could use a little bit more effectively. But once we see a huge divergence to the upside of this average accumulation price, once this orange line starts getting to these very high exceeding values, 4, 5, 6 plus into this upper red region, it just indicates that a lot of people are at a monumental profit on their positions. And once
Mhm.
we're beneath this average accumulation price, again, it's time to do the opposite. Like you mentioned previously, it's time to buy when there's blood in the streets.
Mhm.
Now, as I said, a vast majority of people are actually almost doing the wrong thing at the wrong time. So what we can do, this is slightly more complicated metric. This is the spent output profit ratio, but this is looking at the realized profits and loss made on the network. So looking at the realized price, that's great. That's the average accumulation price, but that could show unrealized profits or unrealized losses. What we
Mhm.
actually want to see is people taking action. And like we can see, when the price is significantly beneath this average accumulation price, such as the tail end of the previous bear market, this is actually when the most people are selling their Bitcoin at a loss.
Yes.
Now, this is people who don't have this conviction, who don't have access to these tools. And what they're doing is just distributing their coins to these people who have been in the space for a long period of time. So what we can see, once we see a huge amount of capitulation in the market, these usually signify bear market bottoms. And the same is true for the upside. Once we see huge spikes to the upside, once we see lots of profit taking occurring on the network, again, these are usually by people who have been holding Bitcoin for extended periods of time. And from a purely supply and demand economics perspective, when everyone's making money, when everyone's taking screenshots of their trading app, when everyone's saying, yeah, no, you should have bought more, you should have bought when I told you so, this is when there's extreme greed in the market. And this is when really, again, you should be looking to maybe be a little bit more defensive. But like I said, once we see these huge capitulation events, who's actually buying these capitulation wicks? Who's buying Bitcoin when it's down at the market? So what this metric is looking at is the hodlways, and this is the percentage of Bitcoin held by different age bands. And again, if on any of these it sounds a little bit complicated, it sounds a little bit, you know, advanced, and maybe I didn't explain it so well, on all of them you can just go beneath the chart, see the data, see an explanation, etc. What we can see is if we just isolate to look at Bitcoin's long-term holders, so if we look to the 1 year plus, for example, once this is increasing, it indicates that the percentage of Bitcoin held by long-term holders is increasing. So we can see during bull markets, this actually moves to the downside because these long-term holders are starting to sell to these new market participants.
Mm-hmm.
But at these bear cycle lows, we actually see this rapidly increase. So not only are we seeing Bitcoin beneath the average accumulation price, we're seeing a huge amount of people capitulating, but they're capitulating and selling their Bitcoin to these people with the highest conviction who have been in the market for the longest period of time. So what we need to do is act as a contrarian to the majority of retail participants and start following the people who have the most experience and have the most influence on the underlying market of Bitcoin. Now, one thing I said earlier is this cycle has felt very different because previously we've had these huge rallies to the upside, these big exponential periods of price action where retail are FOMOing in, and at these points we see a rapid decline in the Bitcoin holder waves, indicating that these long-term holders are ready to take some profit. Whereas in this cycle, we've seen a very steady, very long period of distribution, pretty much starting from when the ETFs were announced in 2024. So from that point, we've seen a very steady distribution from these long-term holders. Now, a lot of people say it's just people converting their holdings to ETFs, and that may be true to some extent. But if you actually look at the amount of Bitcoin that's been distributed by these long-term holders, looking at the pure numbers, we can see that it is millions and millions of Bitcoin that has been sold. So when this is actually occurring, this isn't all being scooped up by institutional investors. They've only accumulated 1 to 2 million, whereas the cumulative amount of long-term holder supply that's been sold this cycle is around 8 million. So this is still a very much retail-driven market. But once we see long-term holders begin aggressively distributing their coins, again, it coincides with Bitcoin having periods of potentially upcoming negative bearish price action. Whereas after these periods of long chopping and consolidating, when the long-term holder supply starts rapidly increasing, when everyone gets bored, when everyone's a little bit disincentivized and not liking the Bitcoin price action or any other cryptocurrency that you're analyzing, we can see when the long-term holders again start aggressively accumulating, prevent distribution, stop their profit taking, and have the conviction to hold for the long term when this starts rapidly increasing. Again, these coincide with periods of price action where you probably want to start accumulating, when you probably want to do the opposite of the sentiment that you're seeing on social media, when you want to start doing your own contrarian analysis. This is really when there's the highest amount of opportunity in the market. So once you piece all of these together, like I said, there's no holy grail indicator. There's no one metric you can look towards to say, this is exactly what's going to happen. This is exactly what's not going to happen. But again, you piece together the things that you see in global liquidity. You piece together the on-chain supply and demand economics. You look at the underlying fundamentals of Bitcoin and the institutional inflows that we're seeing. And then you piece together the technicals and derivative factors as well. And all of that can just increase the chances and increase your own conviction of that playing out.
Yeah, I think what I really like about this as well is that if you're anybody watching this that's very, very technically minded, right? You're somebody that's very much, no, you know what, I like my price action. I can make money with price action. I'm just going to stick there. What I would challenge, and I'm a trader, I fought against this kind of data. I fought against volume spread analysis for a lot of my career because I don't know, I felt like I kind of knew, I felt like I was in my lane. I knew what I knew. It was working for me. I didn't want to bring in all these over complexities, right? What I would say to those people is you've got all of your data. If you're a trader that's worth your salt on a technical level or any level, you've journaled very well, you can access your previous trades, go back and look at this information, overlay it, find out what's useful for you, find out what's not, find out what brings you good confidence and what doesn't. Ultimately, we're in an ever-evolving game of edge, and if what you're doing is relatively simple, that edge can erode very, very quickly. So to be able to have access to things like this now that, you know, like you said, Bloomberg with 30, 40,000 a year, right, to get this information for traditional markets, to have this for free is pretty crazy. Now, there's one chart, I don't want to go on a tangent here, but one chart I always used to get shown, which was the Newpool chart, net unrealized profit and loss, right? So I found it really interesting to have your view on there as well, though, that actually look at the realized profit and loss here. Really, what are people actually realizing, right? Not what is unrealized, but how would you kind of look at this chart? Because this was, you know, brought into a lot of fame again, I think, the early days of Willy Woo, maybe, you know, like Crypto Quant, people like this that were showing this data when very few people understood it. But I really have to say, I really love the UX of the site as well, Matt. I think descriptions are very, very clean. Everything's presented really, really clear. So yeah, for example, people on here probably seen the Newpool chart. How would you be looking at this right now? Or what kind of things would you want to see on here that might give you an indication that whales are starting to absorb down here and they're starting to accumulate again?
Yeah, so I mean, it's something that we see not just in on-chain data, but in technicals, derivatives, etc.
Hmm.
Is even though every cycle is going to be unique, the underlying dynamics of the market are evolving and changing as they always are. There's lots of patterns. People are actually somewhat predictable. So once we see a huge amount of unrealized gains in the market, and again, this is purely just looking at the ratio between the realized price and the underlying price of
Hmm.
Bitcoin. But again, you can do this type of analysis on other crypto assets as well. Once we see a level of capitulation that would put the average investor at, say, a 30% loss, for example, this is just a good time from a psychological perspective to go against your own inner biases, beliefs, emotions. Because one thing we can see within trading is relying on emotions is very rarely a reliable signal indication.
Very rare.
Because I mean, we're all guilty of it. It's human nature to see, a red candle, to see your own portfolio at a loss and
Hmm.
think, I was wrong, to start thinking maybe here I should capitulate, maybe I should go into another asset. But this is when you need to look at the data and you can actually map out the capitulation happening in real time. Now, again, when you look at this data, there are some nuances. So a lot of people look to this and say, we didn't hit this upper red euphoric region this cycle. So is this data worth paying attention to?
Hmm.
Now, I would say yes, of course, I'm a little bit biased, but we can actually take derivatives of this again and take some new metrics that are actually adapting to the changing market conditions to
Hmm.
prevent these diminishing cycle returns. Because as Bitcoin matures, as the market cap grows from a few $1 billion to a few $1 trillion,
Hmm.
the actual capital inflows required to have these huge exponential increases above the realized price are just less and less likely. And the same is true to the downside when we look at the unrealized losses once Bitcoin's massively beneath this realized price. Again, more and more people are realizing that we're not going to have these huge volatile swings to the upside and the
Yeah.
downside, and we're almost going to mean revert back to this realized price. So it
Hmm.
makes sense that we're not going to see these huge swings to the upside and the downside. So rather than purely just looking at the percentage returns in a changing market, if you look at metrics that are actually adapting to Bitcoin as it changes, so rather than just looking at the all-time amount of profit or loss on the market, if you
Hmm.
compare, say, a monthly average, and this is a slightly different one, I won't get too much into it, this is one of the more complex charts we have, but if you look at a 30-day average compared to a yearly average of certain data points, what we can see is even as Bitcoin's market cap increases, even as we see reduced diminishing volatility due to the growing institutional influence, once we see more distribution from long-term holders into more and more institutional long-term conviction hands, data points like this are still going to adapt and allow us to actually see the changing psychology of market participants in real time. So this value days destroyed multiple actually has these big red spikes to the upside once we see a huge amount of long-term, large, experienced, influential market participants begin taking action on the market. But again, rather than looking at it just over a basis of Bitcoin's entire history, if we look at it compared to a monthly average, compared to the yearly average, then it
Yeah.
again allows the data to adapt to the changing market conditions. And what we can see is during this cycle, each of Bitcoin's major peaks coincided with a major peak in the value days destroyed multiple. So again, it didn't work perfectly. No metric ever will
No.
throughout the entire history of any market. But once you can piece together, once you can see a huge amount of open interest increasing while funding rates are going crazy, while the Fed are maybe getting a little bit shaky, once we're also starting to see potentially some outflows from ETF holders, also coinciding with a huge amount of profit taking on the market when looking at metrics like this, then it can maybe give you some indication that as Bitcoin's approaching new all-time highs above $120,000, that maybe now is the time to start being a little bit more defensive. And the same is true for the downside. Once we see a huge amount of reduction in distribution, profit taking from these long-term experienced market participants, once these
Hmm.
value days destroyed multiples get into these green zones. I mean, throughout this entire cycle, if you'd have purely just looked at this one metric and accumulated during these green periods, you'd have outperformed practically everyone.
I was
And
just
then if you
looking at
were
that
again,
actually. Yeah. It's
yeah,
really
if
zoomed in on that.
yeah, and what you can do is if you are a site subscriber, of course, shameless shill, what you can do is actually gain access to the API and the data yourself so you can do your own manipulation. But if you just imagine putting a moving average or something on this data, as
Hmm.
price was moving to the upside, the value days destroyed was rapidly increasing. Once we actually crossed back beneath a moving average that I'm kind of imagining on the chart here,
Hmm.
once we crossed back beneath that here, that kind of signified the start of the downtrend. And the same was true here. Once this massively spiked, and started decreasing again, you could take action. And following that, Bitcoin's price has been in a little bit of a downtrend. So once you can take these metrics and kind of chop and change them, and especially these ones that are adapting to Bitcoin's changing market conditions, then it allows you to see the things that really move the price action, which is supply and demand. It feels like a broken record, just constantly reiterating this. But really, that is the thing that moves not just Bitcoin, but all markets. And the fact that we now have access to this data in real time allows us an edge that has just previously never existed. And again, this may be true for more long-term holders, but even if you're just using these tools to reaffirm your own long-term or short-term biases, you can look at data that potentially points towards more intraday, more immediate price action, looking at something like the whale shadows, which we mentioned previously. What we could see is a huge increase in long-term holder Bitcoin movement. And once we see huge spikes to the upside, again, pretty much coinciding exactly with the market cycle peak that we had a few months ago. Once we could see a huge amount of long-term holders begin moving their coins, and these are signals that you can track in real time. Once we see this occurring, it gives you some action, it gives you some reaffirmed confirmation that maybe now you should start doing the opposite of what your internal emotions, instincts, and biases are telling you. Because when prices move into the upside, it feels wrong to start taking some profit. It feels wrong to start distributing coins. But really, that is the time we need to focus purely on the data, almost be a motionless robot when it comes to your decision-making process, and look at these data points and then take an unbiased, unemotional, data-driven, fact-driven approach to your own trading and investing. So once you piece all of these together, again, it can really just clarify what you're doing. And I know I said we're going to be simplistic, and I've shown about 8 different really complicated charts today. But like I said, you can just focus on the really simple ones. You can look at something like the spent output profit ratio to see real-time capitulation, to see real-time euphoria. And again, one that probably everyone knows very, very well, just something as simple as the fear and greed index. A lot of people dismiss it. But historically, just looking at some very basic sentiment analysis shows that when people are incredibly euphoric, extremely greedy in the market, it's probably time to start maybe not immediately doing the opposite, but at least considering scaling back with your aggressiveness when it comes to your long bias. And when everyone's extremely greedy, again, maybe start doing the opposite. Maybe start looking for opportunities in the market, looking for at least a short-term mean reversion. So as I said, shameless show. We actually have a Black Friday deal at the minute, so you get 40% all of the annual plans. But piecing these all together, unbelievable deal. And then with that, you also get the alerts as well. So I'm going to be honest, I'm a little bit lazier than I used to be. I don't look at the charts all day, every single day. So
maybe
smarter, is just get
or more efficient, I think would be a good way.
That's probably the best way to do it. I'm more efficient than I used to be. I like that, upselling myself there. But what you can do is just set up alerts. So when any of these indicators flash, you just get an email alert. You can just check your phone. It'll ping up, and then you can say, right, now's the time to take action. I don't need to look every single day at 150 different charts. I'll just wait for the alerts to tell me. I'll wait for the trading view indicators to flash so I can just check alongside my technical factors, etc. And once you piece all of these together, again, hopefully it can just simplify that process for anyone, regardless of whether they're an active trader, a strategic dollar cost averager, a long-term investor, someone who just loves Bitcoin. All of this data can, again, help to clarify where the market may be going in the immediate and long-term future.
Yeah, for sure. And what I love about it as well, like you kind of lent to earlier, this can be used on all time frames. Right? You don't need to be a long-term investor just to use this, right? Like as an intraday trader, unless you're doing high frequency trading algorithms, which I don't think many people watching this will be, you're not going to get much more of a fast paced market to trade. So you think, yeah, okay, well, that's great. But then you can use this for trend. You can understand whether you're on the right side of trying to be long too early. Has the market changed? What's sentiment telling us? How can we align these things in the market? And look, I'm a very simple creature. I try to learn things as complex as I can and really boil them down to their real core basics. And I have to say, there's no charts we've covered today that really make me step back and go, how am I supposed to read that? It's actually quite simple, right? I think the key thing, like with anything, is finding out what really, what the best data is to support how you trade. And don't just find the stuff that fits, find the contrarian angles as well, right? But ultimately, I think it's one of those things that if you can get a little bit of extra edge in these markets, it's always a good thing to do. And there's very, very few things out there that are actually leading indicators rather than lagging indicators, right? So, if you're getting that little heads up off of, off of the whales, off of the wave chart, or if you're getting that from the Newport chart and you're finding out, where these major participants and long-term holders are maybe buying, where they may be selling, well then, like you said, you don't have to imagine that moving average. Go to the time frame on your technical chart, put a fast and a medium moving average on there and say to yourself, all right, I'm getting indications on chain that the market's starting to move lower. What do the technicals tell me? Are we losing key levels of support? Have we broken below the moving averages, right? All of a sudden, you're not just looking at a couple of lines on a chart and building a trade theory. And that's no disrespect. I'm a technical trader, right? But I think one of the downfalls with technical trading is people have this expectation that, you're predicting everything off technical charts. Look, the charts are a print. They tell us remarkably accurately what has happened and also the psychology of the buyers and sellers. But to understand where these major participants are potentially positioning themselves, can be the difference between, say, holding a short position for a 2-hour gain versus holding a short position for an 8 or a 10-hour gain, right? Because you're waiting for that information that the candles just don't tell you, right? Or they don't tell you that kind of right away. So, okay, God, I mean, I could go on forever, and we've got about 2 minutes left in the show. So, Matt, I'm going to ask you, just as we start to close this up, right, whether if you have maybe a key takeaway or something for our viewers, right, what they can do, and also, please, how do we get access to this? How can we contact you? How can we get involved, and how can we access this data?
Yeah, of course. So for people who maybe this is the first introduction to on-chain data, to actually piecing together factors that maybe haven't been traditionally utilized in equity markets, commodity markets, etc., using this new technology, using this data to leverage it to your own advantage. If you come to Bitcoin Magazine Pro, as I said, there is of course some paid features, but if you go to the on-chain introduction site just on bitcoinmagazinepro.com and just look through these, and again, if you come to the conclusion that this isn't right for you, if this doesn't suit your own trading and investing philosophy, then that's absolutely fine. This is, a free market, and you should do what works best for you. But if you can look at this data and actually notice some patterns, if you can notice some influencing factors, if you can look at some more advanced metrics, such as the realized cap order waves, again, I could speak for hours about all of this stuff, and you can see what's actually happening on chain is causing some movements in price action, and how can I incorporate that into my own trading and investing? And you can notice that this can provide some edge and some confluence and reduce your own internal biases and conflicts, because we also suffer from this. I'm super bullish on Bitcoin long term, but I know that if I take a step back and look and analyze the data impartially from a purely data-driven factual approach, that sometimes my long-term bullish bias for Bitcoin might be a little bit wrong, at least in the short term. So when I can look at these data points, it gives me some indication that I need to take a step back and take action that doesn't feel instinctive and intuitive and necessarily right to me. But if I trust the data, I can see historically that the hit rate on a lot of these metrics is pretty much second to none. A lot of them work incredibly well, and especially these metrics that are dynamically adapting to the evolving market conditions. They just provide such an unbelievable edge in an underutilized niche within the market. And like I said, there's other competitors out there. If you don't want to use Bitcoin Magazine Pro, Glassnode, CryptoQuant, spin up a node. You can do this all yourself. Bitcoin data is entirely free and open source for everyone. We're just helping to speed that process up because, like I said, I'm trying to be a little bit more efficient with my own analysis and investing in the market. So if I can just look at a few of these charts, if I can just receive the alerts when they're actually hitting, if I can just look at TradingView where I have all of my existing indicators anyway, and piece all of these together, then it again just massively reduces the amount of time I'm having to spend doing this analysis. So I can go out and enjoy the grey outdoors, get some sunshine, enjoy the Christmas weather, because realistically, as much as I love doing this, there's nothing better than knowing that you're making the right decisions, you're sleeping well at night, trusting the data, and still outperforming without having to spend hundreds and hundreds of hours actually doing this analysis. Leave that to the boring people like myself who get paid to do this, so you can go and enjoy whatever it is that you enjoy. And yeah, as I said, just try it out. We do have a 40% off deal at the minute for annual plans. So we're actually a fraction of the standard industry price compared to a lot of these other competitors, compared to CryptoQuant and Glassnode, which are great platforms, by the way, if you use them, great. If you want to continue using them, no problem at all. As I said, do what works best for you. And if you test out all of these, if you look at our data, if you look at our industry reports, trading view indicators, alerts, etc., and it works for you, then great. Welcome aboard. Go to bitcoinmagazinepro.com. Go to the Bitcoin Magazine Pro YouTube channel where I try and clarify a lot of this data and provide some analysis. And as I said, just do what's right for you. Figure it out. And yeah, if there's anything else you'd like to see, then I'm pretty open. You can contact me. You can ask for certain types of analysis. And as I said, I enjoy doing this. It's a hobby for me. It's my job. I get to wake up every single day and look at Bitcoin data. Not many people look at Excel charts all day, every day and get very excited. I am that guy. So this is great for me. And if you enjoy it too, then reach out and we can continue to try and clarify Bitcoin and its data together in a nice communal open source manner.
Awesome. Well, look, this has just been absolutely fantastic. It's been really, really insightful. I think, look, for $17 a month at the moment seems like a little bit of a no-brainer to me. I mean, look, we're going to have all your details. By the way, if anyone wants to know more details on here about Matt, about what they do over there at Bitcoin Magazine, you can find all the information in the description on the YouTube channel. All right, it's a little bit more muted for anybody is accessing this through Twitter or X. But what you can do is go over to the Birdnest profile and you can find all the information on there. We'll be sharing all of this wonderful stuff from Matt as well. And obviously people will be watching this back and sending us in some questions as well. I mean, for me, it's been really, really insightful. Any way that anybody can gain edge in this market is super, super important. And one of the things I want to close up on as well is that often, people will discover a lot about themselves, pushing themselves into new realms, right? It's happened to me throughout my trading career, areas I thought I'd never go into. I mean, hell, I never thought I'd end up in finance and trading and that, right? The last thing I thought I would ever do until I found this passion for it, relatively late in life. I was in my late 20s, right? Early 30s, completely pivoting career because I had, like you do for data, that's how charts kind of grabbed me, right? But now I'm so interested in getting in behind, just adding extra edge to that, always wanting to be the best version of myself as a trader, as a person, as an educator, but ultimately as a student of these markets, which we are, for our entire lives that we have the pleasure of kind of trading these. So Matt, look, thank you so much for joining us today. Everyone, you can find out all the information you want on there. You can reach out to Matt at Matt Crosby Pro. And if you want anything, do engage, ask questions. Look, the guy is seriously passionate about this. I already want to dive into his Excel knowledge, by the way, all right? So whatever you're going to do, make some time, broaden your horizons, right? And do let us know. Fire some comments across. A load of you have just got free access to the premium Discord. So ask us some questions and we'll happily hook you guys up. So loads of really nice comments coming in the chat. Thank you very much. Inna, absolutely welcome. Thank you, Taha. Well, at least one legend on the stage, but thank you for the compliment, my friend. And Matt, thank you so much for joining us. Everybody else, let's hear it for Matt, and let's hopefully get you back on again soon in the future.
Anytime. It's been a pleasure, BC, and I'd love to come back, share some more data, share some more nerdy facts and whatnot, and just nerd out about Bitcoin and cryptocurrency markets and all its data. So yeah, it's been a pleasure. Happy to come back anytime, and hopefully we've helped people to learn just a little bit more about on-chain data today.
Well, you've definitely helped me, and I'm sure it will help a lot of others as well. Thanks so much, Matt. Have a fantastic evening ahead, my friend, and we'll catch you again soon.
Cheers, you too, mate. See you later.
Cheers, buddy. Okay, well, I mean, you know what? I'm absolutely buzzing after